Hi, everyone. Good morning, good afternoon, good evening. Depending on where you're joining me from, it's Solomon King here, and I want to welcome all of you to today's live session. Happy weekend, and I believe all of you are preparing for a new week. By now, I believe some of you are already working on your chart, trying to come up with your weekly profile to anticipate price movement over this new week. All the same, highly welcome here. We're just going to touch a little bit about liquidity today, and this live session is going to be very brief. Let me just know where you're joining me from. If you're joining from Africa, Asia, America, Europe, whatever part of the world you're joining us, let me know in the comments and I'll give you a shout out. So good to have all of you on this live session. So let's have a very, very brief discussion. Very, very brief, as I said, discussion about the power of liquidity. All right, I can see people from all over the world, people from Pakistan, Cameroon, people from India, Nigeria, people from London, people from Uganda, people from Canada. Guys, you're super, super welcome. I'm excited to be having this session with you. And I missed all of you guys. And trust me, I want us to sustain a mindset this year that we're going to make so much money this year in the markets that it will look like we are the ones predicting the algorithmic movement of the markets. It's going to look like we are all part of the smart money that are pumping bigger funds in the market. Will become so experts, will become so knowledgeable about the market that whenever we put into practice what we are doing, it will look like we have a prophetic insight of what is happening in the market. Oh, NFP direction. I don't know. I don't know the direction of the NFP. This is NFP week, actually. That's very true. But then what we are discussing today is not top-down analysis, or I'm not doing a weekly, uh, I'm not unveiling the weekly profile for the week. No, no, no. I'm just going to show you a simple difference between sweep of liquidity and run of liquidity, or run on liquidity. This is some of the very, very basic things about liquidity, and many people don't get to understand the purpose and the reason behind them. All right. So, how many of you can quickly type in the comments what you understand, or let me have your idea? What do you think is the word sweep of liquidity? Or whenever we make that statement, sweep of liquidity, what do you think it is? And then sometimes we say run on liquidity. Just a very interactive session with you guys. What do you think it is? I can see you guys. John is from Nigeria, Lagos. I can see Adeoye from Dubai. So grabbing money. Yeah, grabbing money. That's true. Beautiful. From John Swill, grabbing money is what it is. Yeah, it's what it is. That is exactly what liquidity is. Smart money grab. Beautiful. Taking money. Beautiful. I can see all the beautiful responses from Benga Asian. Let's have more answers. Grabbing money, sweep is a fail to close and run in a close. I think that's a very concise answer. Thank you, Godwin. I can see all your responses. Thank you, Emmanuel from Kwaibom. Sweep of liquidity simply means that we will change a direction. Very beautiful definition. Thank you, Ibrahim. I think that's a very, very concise one too. Sweep of liquidity means taking out a liquidity pool. Beautiful, beautiful. Now, it looks like many of us that are joining this session, we have an idea of what it is. What it is. We have an idea of what it is. And for those of you who don't know what liquidity is all about, you really, really need to understand the concept of liquidity, because this would give you a different perspective of what the market is doing. All right. Because every time you see a market facing a particular direction, just have it in mind that the market is after liquidity. And I've said this long before now, that the entirety of the word liquidity and all the terms around liquidity is simply called money, other people's money. Liquidity simply means money. Now, we also have to understand where money is resting or where this liquidity is resting. And this money is in the form of people's interests. When you open a trade and put a stop loss, you put a take profit, or you put a pending order, these things are converted into money. All right, let me give you an example. If I were to be in a trade here, let's say, let me just give you an example. If I take this trade from here, let me go long. From here, let's say I am taking this trade probably from here, and I am putting my stop loss just below here. What do you think that stop loss is? Here is money. All right, it's money. And I want you to understand that every time you are trading in the market, for you to make money, somebody has to lose the money. So, at the detriment of other people's mistake. So, if I am taking a trade from here and my stop loss is here, it simply means that my stop loss is money. All right, I've given an analogy of that so many times, but I just want you to understand what it is. So if price starts coming back, and then take out this place, simply means that it went over and grabbed my money, took it by force. In fact, you can use that word that every time you see somebody making money in the market, it's simply an act of force. You see, you have to use force to collect it. You have to use force to get it from somebody. All right. Beautiful. You have to use force. So, if that is the case, that means every time we as people are taking a trade, what we should focus on is locations where we cannot, or where the smart money cannot take our money by force. I have to tell you this, that you are dealing with an industry that have some of the smartest minds in the world, and they know exactly where your stop losses are by the reason of longevity in the market. Now, why am I making this video? So, there is a reason and a purpose behind everything you see happening in the markets. When you see price moving in a particular direction, just know that it is facing something, and that thing is called liquidity. For example, let me give you this as an example. Look at this price action. The moment we see price heading this direction, heading south, beautiful. That is the direction, south. You have liquidity here. We have money resting. So if you see price going in that direction, what do you think price is doing? It is going in that direction to sweep liquidity. And that is exactly what the word sweep of liquidity is. Running over a liquidity pool, a pool of liquidity. And the reason behind this is because price wants to establish balance in the market. And the moment price takes out that money, you will see it rebalancing or redirecting the movement. That is how the algo is designed. So if you know this, you can create a trading model around just liquidity sweep. I've not come to talk about another thing aside from liquidity sweep and liquidity run, and I will tell you the difference. This is a typical example of a sweep of liquidity or liquidity sweep. Price heading in that direction. To what? To sweep liquidity. So, in my simple trading understanding, when I see price looking at this direction, having these guys in mind, having this liquidity pool in mind, what should I call my directional bias? You now see where many people don't understand directional bias. If I see price heading this word, then what is your directional bias? Is it bearish? Is it bearish? What would you call your directional bias in such a situation? I want to see your answer. Is it bearish? Bullish. It's as simple as that. So when you come to me and ask me, what is my directional bias? Sir, I am struggling to establish my directional bias. I am struggling to understand where my directional bias is. I will ask you, where is your liquidity pool? And where do you think price is going to go and sweep it? That is it. So if that is my directional bias, all I will do is to position myself where price will give me all the breakout structure retracement into a fair value gap or other block. I know that the journey is here. The journey, the destination is here. So as price starts moving, I will now align myself in that direction. Boom. That is it. That is it. Now, according to ICT, I learned this from ICT directly. Many people, I've not seen many people thought this, but if you go back to ICT's, some of the videos you have on ICT, I think some of the videos are on his YouTube channel. I realized that we have a different perspective of what liquidity is even is. Now, if I ask many of you, where is the liquidity resting? Some of you will just tell me this is it, above this high, right? Above this high, just above this high, anything above. But according to ICT, the liquidity starts from where the body stops. I think I've not taught some of you these things. Where the body stops. This is where the liquidity starts. Anything from the body above, that is where the liquidity is. Do you understand? Is this something new to some of you? Yeah, if you're late, you can join later. You can join later. Liquidity starts from where the body ends, just where the body stops, up to the topmost part of the wick. Right there. Yeah, some of you said just the wick, but if you follow ICT very closely, you realize that that is how ICT defines. Yes, at some point you can do that. Yes. All right. You can do that. So from here up to this area, it's just that the density, now the density of that liquidity pool increases as it goes above there. So we have lesser density of liquidity here and higher density of liquidity here. When we say higher density, that's where the more money is. All right. That is why you see smart money always pushing above. Let's call this density of the money. All right. Density of all the liquidity. People's stop losses are in more density here. So a little bit above it. A little bit above it. I will like to seek time where I will teach you guys how to expect that in perfection. All right. And this is what we call liquidity sweep. Price just targeting external liquidity and boom, that is it. In other words, this we call external liquidity. External liquidity. And that is how you can understand the directional bias of your trade. When trade take out external liquidity, you will see a sudden shift in the directional movement. Now, after price have cleared this, where do you think price will start looking for? Where do you think price will start going to? Internally, because at this point, that is the goal. And the next thing price will do is to try and retrace inside. All right, to try and retrace inside. Now, it will interest you to know that price will always seek to go lower. When you're coming inside from an internal range liquidity, since we're dealing with a bullish movement now, the density of liquidity is higher on the discount area. The density of liquidity, where liquidity is resting at higher level, is here. Let's say here we have more money. All right, the density is all about the population of people's distance. Maybe we can have one or two here. It doesn't mean that there is no liquidity around here, but the density is higher as you go down. That is why we have premium and discount. Do you understand? Thank you, guys watching from Tanzania. Do you understand? Yeah, some of you. Consequent encroachment of weak. Importance thereof. Okay, I think this is not the topic we're talking about here. I'm just talking about liquidity. As you go lower price, the density of liquidity increases. And that is why we want to always see price take the movement down to where? To the discount area of price. So when we see price coming down, it's not because, you see, it's not because there is simply, or it's not because price just wants to come down. It's because the density of liquidity is higher on the lower part of the price range. So dealing with an external, the moment price takes out external range, there is an entry model specifically for that. It's called the market maker sell model or the market makers buy model. I don't want to go into that. What I'm just showing you today is how to interpret the liquidity externally and internally. They come down here. And what next would you see? You want to see price, deal with the density of liquidity below here, and then progress with price again. I want to see it play out. Okay? Oh, the more density of liquidity below here. Now, notice what price did. It went all the way, even clearing liquidity below here, all the way down here, all the liquidity below here, massively trading into that area. And that is all about the liquidity that is resting in those areas. Dealing with that, price will now seek to go back to where? To a higher area where there is more liquidity again. By now, there is enough liquidity for price to go and get up there. So whenever I come to my chart and I tell you, this is where I think price is going to, there's something I will teach you subsequently, maybe in our next live class. Maybe I will teach that in our next live class, but I have to teach my mentorship students before I can give you just a chunk of it. All right. I have to teach my mentorship students. I want to teach them that how to calculate the longevity of time it will take for price to trade into that time. Now, that is for sweep of liquidity. How about run on liquidity? Run on liquidity is simply when price trades from an internal perspective. Look at this. Okay, we have price coming like this. When you have price from something like this, oh, beautiful. What do you call this? Break of structure. Is that what we call a break of structure? We have a lower low, lower high, price trade and run through it. This is your run on liquidity. Price ran through it massively. So when you have this, is another form of liquidity grab. We call it run on liquidity because what is resting here is money. Every time you see a low or a high, there is a liquidity there. There is a liquidity resting there. There is a liquidity resting on that. When you see price does this, close inside is sweep of liquidity. When the body of the candle closes, below it is run on liquidity. You see it. So this guy, you have a sweep of liquidity below and price went up straight to that level. Do you understand? How about this? Run on liquidity. You now see the simple difference. Uh, but you are a good mentor. I'm always watching your videos and thank you. Currency strength meter. Yeah, some of these things you have to bring them into context. You can use currency strength meter. There is nothing wrong about it. All right, there is nothing wrong about currency strength meter. If you can get some few entries with currency strength meter, it's very okay, right? When price closes with the body outside that, is a run on liquidity, but when price end up just leaving you size, yeah, the recording will be on the channel. Yeah. All right. Some of you that are asking me some of these questions about time frame, other things like this, I may not most likely have to answer all of you here, uh, but you can do well to join our mentorship. We do a lot there. All right. BTC top down analysis. Synthetics. I will have a live session for synthetic. All right. I will have a live session for synthetic. I'm just waiting for the right time. Yes, it's true. Benga is in. If you understand order flow and market structure, you don't always need currency strength meter. It's true. Some of these things we used them when we were starting, but then now we have a higher knowledge that have um, we have access to it. This guy is asking about gold. All right, let's check gold. It's not. I'm not here to do top-down analysis, but the way some of you are very, very anxious, expecting me to analyze gold. Let's have a look at gold. All right, it's important we look at that. So, still from the liquidity concept, anytime I want to trade gold, I want to understand what the higher time frame is, especially the weekly time frame. All right, the weekly time frame is important, very important. Now, look at this. Is this a liquidity run or a sweep of liquidity? Where are you guys? I just explained something. Is that a liquidity run or a sweep of liquidity? I want to show you guys something. You can trade crypto you can trade any asset with smart money concept. Smart money concept is for every single asset that runs on liquidity. The moment that asset is designed to run on liquidity, you can trade with it. Yes, it's a run on liquidity. It's a run on liquidity. And which means that this week, as the week will start, we will expect a further movement to create a better range before we see a retracement. You now see this simple knowledge I shared with you. It's not sweep of liquidity, Chudubem. Yeah. Yeah, it's going to be on the channel. It's not sweep of liquidity, it's a run on liquidity. Whenever you see a sweep of liquidity, you should expect price to do some kind of sluggish movement for some few days before it moves. I just want you to take notice of that. Look at this. I want you to take notice of this. All right. What happened this week? Is this a sweep of liquidity or run on liquidity? Those of you asking me to do this. Is this a sweep of liquidity or run on liquidity? That's a sweep of liquidity. Sweep of liquidity. All right. It's a sweep of liquidity. And when there is a sweep of liquidity, you will expect the subsequent week to have some sluggish movement to respond to that. And that is why if I am trading this week, if assuming I want to trade this week, I will take some time. You may even have a bearish week. You see, we had a bearish week. Look at this. It closed as a bearish candle, trading into what? A fair value gap, right? Just here. And then the subsequent week, there was enough energy to push through. You see it. Look at where this guy closed last week. So if there is this kind of price action, just go back to your chart and check. Every time you see this, you're going to have some little, you're going to have a kind of a sluggish price movement for that particular week. But the moment price close with the body of the candle outside it over the week, the subsequent week is going to be a much smoother price movement. So let's have it. I want to show you if I have another candle that closes. It's just like this one, this guy that closed above here. You see it massively going there. And we have another week right there. Oh, I want to see it. Beautiful. Now creating our week for us. So if you ask me from here, what do I think this new week is going to be for gold? I will tell you a bullish movement. Why? My reason is simply because I've closed above this. It's a run on liquidity. Run on liquidity simply means a break of structure also. All right. Mm, the candle isn't closed yet. Okay. The candle is closed. I don't know what broker you're using. The week is over. We are about to start a new week today. We are about to start a new week. For mentorship details, there are contacts there. You can use the contact in the description of this video. All right. In general, Forex pair. I will have time for that. Just drop the comment in the real video when I leave here. I will just come and give you some of the pairs and how to trade them across. Oh, in the mentorship, we do explain what pairs to focus on uh, according to the time of the day sessions. All right. So, what should I expect this week, guys? A bullish candle, right? Which means I want to see a bullish week for gold. And don't forget, it's an NFP week. Anything can happen. So you can look at this and say, where do you want to trade? I can trade lower into a bullish mitigation block before continuing with the movement. Or as price starts, it will continue upward. All right. So I have to see the market start first before I can easily give you the prediction. Before I can easily give you the prediction, I prefer to do it when price is actively acting. I've done the analysis here many times. Maybe tomorrow I'll go live and do a little bit of other analysis on gold. This is a bullish mitigation block, but I'm also considering this area if it falls under the discount area of this. Okay, this somewhere around here. This favor lookup is very, very powerful. If we end up having price coming down, that favor lookup. But for now, price is bullish, and I'm still expecting bullish movement massively over the new week. NFP will come. We may possibly get that trade on Monday. Is just the opening of the week. We cannot come up with the entire idea of the trade for that week, but we can. We may most likely have a little bit of a retracement inside this, and then boom, we are back up. But overall, we are expecting a bullish movement for gold. All right. So sweep is called to disrespect of opposite arrays. No, 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 it's not that. Thank you, government FX. Yeah, thank you. Which work best between order block and a mitigation block? Obviously, all of them are good, but you look at the PDRA. The PDRA puts a mitigation block as the topmost. It appears that many of you don't have an understanding of that. CRT, candle range theory. Yeah, you see, I want you guys to understand that many of these things people are reframing in the industry, most of them are just simply about liquidity, break of structure, and market structure shift. All this change instead of delivery, internal, what they call it. There's this one they came up with lately, candle range theory, all those stuff. They are the same thing about liquidity. It's just the terms that is just there to show us if it's a new thing. You see, it is when you come to your chart that you will know you are either a trader or just watching videos on YouTube. If you can't do it on your chart, you just know the knowledge, you have the head knowledge, you cannot replicate it in reality. It's a waste of time. I like to be practical with my things. If I can't do it, there is no essence in it. All right. Forget about the times. Just have an idea of how the rhythm of the market works, and you're going to crush it above 50% if London makes market structure in a bullish. Well, it's Aslam. Let's see it. By tomorrow London session, we should know where the price will be moving. All right. Uh, thank you guys. I'll have to go off from now. But then the video is going to be on the YouTube channel. And those of you who want to contact me, you can use the link in the description of this video uh, to talk to me. Thank you very much, guys. See you tomorrow. If I have time, I'll just pick another topic, or depending on how many topics I've seen you guys drop. If you want me to cover a topic, I'll be right here to cover it. Thank you very much, guys. Have a great day ahead.